now invite the management of IIFL on the show. IIFL Finance's 300 crore rupee NCD issue opens today. The offer carries a green shoe option to retain oversubscription of up to 1,200 crore rupees. So the company can look to raise 1,500 crore rupees, which it will use for business growth and capital augmentation. Nirmal Jain, founder and chairman at IIFL Group, is now with us on the show. Mr. Jain, thank you very much for joining in. First, if you could tell us why are you raising this money? Because raising from the retail is typically more expensive. And why now? Because the expectation is that perhaps the RBI will cut interest rates next year and then you would get it cheaper. So just take us through, your plans and, your thoughts on raising it from the retail right now.
Okay, so here probably we'll raise up to 1,500 crores. Can you hear me? Yeah, our loan book last year was 64,000 crores, and our liquidity is around 8,000 crores. So this is not a very significant amount in relation to our balance sheet size. But what our strategy has always been that we diversify our sources of funding, and as far as retail investors are concerned, we always given slightly higher rate of interest. And RBI has paused, but our expectation is that at least for 2-3 quarters or maybe for a year, a rate cut will not happen, although rate hike is also ruled out, or not ruled out, but is very unlikely. But at the same time, so it's like an inverted U curve, the rates will remain high for some time till RBI sees stability in the developed markets and US as well. Primary reason is that a rate cut at this point in time probably will be risky for the currency. So therefore, I think in this environment, we are growing and demand for credit is very strong. Last year, we grew by more than 25%. Our credit book, loan book this year is expected to grow at around 25%. In that context, I think this is the right time. Also, I want to highlight one more thing that if you look at our cost of funds, it has not gone up in tandem with the increase in the market as such. Because of our credit rating, our credibility, as well as our track record, particularly in the last 5 turbulent years, we've been able to negotiate far better rate. And the cost of fund incrementally around 9% is something which is in line with our plans. And that is why I think we think this is a good time to raise money. And most of these bondholders are loyal customers, loyal investors with us. For last 12 years, we have done multiple issues, and many of them, repeat invest.
So, Mr. Jain, what would the final cost here be? Because the interest coupon is 9%. Of course, that will be a cost. But there are some mobilization costs as well when there's retail raising of funds as well. So, what would the final cost of funds be? Will it be around 11 to 12%?
So, no. In fact, our cost is minimally higher because last issue, almost 88% of the issue was raised from our own network of branches and customers. So, I mean, just as we have IIFL Finance, we also have IIFL Securities in the group, where we have more than, a few million customers, investors. And as I said, that almost if 88% or 90% of issues raised by our own network, then the cost is significantly lower than many others. So our add-on cost by way of brokerage or marketing that we incur relative to the size of the issue is very insignificant.
And this 1,500...
But it does add few basis points. But maybe 30-40 basis points and not more than that.
Okay, so the overall cost to the company should be about 9.3, 9.4%. An additional of 30-40 basis points.
Yeah, on a longer maturity. Yeah, that's right. That's right.
Okay. So this 1,500 crore of fundraise covers you in terms of capital requirement for how long?
So, not that 1,500 crore rupees we need today or tomorrow. This is all in anticipation. We already, if you see our quarterly results, then we have a liquidity buffer as a group of more than 7,000-8,000 crores. But, so fundraising is a continuous process, just as our loan book keeps growing. It's something which is, if you look at our this year's loan book growth, might be about 15,000-16,000 crores on incremental basis. Maybe 50 or 60% of it basically will be co-lent or basically assigned to banks. So our requirement that way incrementally will be either for the repayment of loan and will not be so significant for the new loans because we meet them by way of internal accruals as well as co-lending arrangements with the banks. But this is still relatively a small part of our total funding requirements.
Okay, yes, 1,500 crores, as you mentioned, versus a size of around 60,000 crore rupees. Mr. Jain, let's talk about business now, because your business momentum was strong in the quarter gone by, and within that, the strongest growth was seen in the MFI business. What's driving this big MFI push? And there's some risks associated with it as well. So, do you expect that momentum to continue?
Yeah, I think MFI momentum will continue. So RBI and government have been very pragmatic in terms of policy changes so that credit reaches the bottom of the pyramid. And this industry suffered very badly in COVID because these people, I mean, they don't have significant savings or buffer cushion to when their income is disrupted for a few months. So many of these customers were given restructuring time period, moratorium, and when they came out of that, the NPAs were significantly higher. But I think that is behind us. Incrementally, this business is doing very well because it's very strongly linked to the economy, and the economy as of now is very vibrant, very strong. So last quarter, MFI also grew very well. Even gold loan business did pretty well. And this year, we expect gold loan, MFI as well as home loan, all businesses to do very well. MFI momentum is continuing. So maybe last year, on the base of year before, growth was significantly higher, more than 50%. This year, I think we should expect around 25 to 30% growth in the loan book.
Overall loan book or MFI loan book will be 25-30%?
So overall will be 25%. MFI can be slightly higher, maybe say up to 30%.
Okay. And you said home loans and gold loan will also do very well. What is the growth rate anticipated there? And what about LAP?
So LAP, we changed our business model because LAP earlier we were targeting larger loans. Now we are targeting very small LAP, which is 5 lakh, 8 lakh in smaller towns. So gold loan, again, I think is dependent on gold prices as well, and gold prices have been firm. Affordable home loan, again, when the interest rates are higher, affordability reduces and it gets impacted to some extent. So maybe I think gold loans still be around 20%. So 20-25% is something, is a range which, most of our businesses will be in this year.
Okay, 20 to 25% growth is what we're expecting in loan growth this time around. Mr. Jain, it was a pleasure speaking with you. Thank you so much for joining us today, explaining to us the contours of the fundraise and the business momentum as well. With that, we'll do one thing, slip into a short break, and up next, we'll be joined by Mr. Maulik Patel, who's the CMD at Make Money Fine Chem, to discuss the business outlook. Stay tuned for this one.